This is Dr. R. Sridhar, Assistant Professor of Commerce, Government City College, Hyderabad. Today's topic is Accounting for Not-for-Profit Organizations, Part 1. Introduction. Not-for-profit organizations refers to the organizations that are used for the welfare of the society and set up as charitable institutions which function without any profit motive. In the sense that an organization which has come into existence for rendering the services to the society and which are not aimed at profit making motto are known as not-for-profit organizations. These are also called as non-trading organizations or not non-profit organizations. Their main aim is to provide service to a specific group or the public at large. Normally, they do not manufacture, purchase, or sell the goods and may not have credit transactions. Hence, they need not maintain many books of accounts as the trading concerns do, and trading account, profit and loss account, etc. Usually, these are set up to provide services to the society, and the books that are maintained by the trading organization is something different which is not required for the non-trading organization. Here the question does not arise with regard to preparation of trading and profit and loss account, as their main aim is to provide the render the services, not to earn the profit or loss. The main objective of keeping records in such organization is to meet the statutory requirements and help them in exercising control over utilization of their funds. Here, the objective of preparing or maintaining the accounts for non-trading organization is to fulfill the statutory requirements as prescribed by the law, and in order to see whether how best the funds generated are being used and whether the objectives for which the organization has come into existence is attaining those objectives or not. In order to protect the assets of the organization, and are to keep an eye watch on the effective utilization of the funds raised, the accounting records are need to be maintained for even non-trading organization. But the set of accounts that are required to be maintained for non-trading organizations differs from that of trading concerns. They also have to prepare the financial statements at the end of each accounting period, usually a financial year, and ascertain their income and expenditure and the financial position, and submit them to the statutory authority called Register of Society. They need to submit the financial statements to the Register of Societies. This is what that is in the case of a non-trading organization or not-for-profit organizations. Now we'll look at the characteristics of not-for-profit organizations. Such organizations are formed for providing services to a specified group or public at large, such as education, healthcare, recreation, sports, and so on, without any consideration of caste, creed, and color. Here, every non-trading organization is established with a specific purpose. The purpose may be for rendering the services in the area of education or in the form of care, health care, recreation, sports, and likewise. The objective may be related to rendering of services to a particular class of people, or it may be a general public at large. Examples of non-trading organizations comes like all education institutions, hospitals, clubs, museums. All these comes under the category of non-trading organizations. Its sole aim is to provide service either free of cost or at a nominal cost and not to earn profit. Here, they come into existence to render the services, and these services may be provided free of cost sometimes, and they may even charge a minimal cost to meet the expenditure of running that society or the organization. And here, what we need to remember is their motto is not to earn the profit. These are organized as charitable trust societies, and subscribers to such organizations are called members. Here, these organizations are termed as charitable trust or societies, and whereas the members who subscribe to these societies or charitable institutions, they are called as the members of that society or charitable trust. Their affairs are usually managed by managing or executive committee elected by its members. A body is elected by all the members to look after the affairs of that particular organization, who are responsible for effective and efficient functioning of that organization. The main sources of income of such organizations are subscriptions from the members. Just now we have discussed, the members will pay the subscription fees, and these organizations also receives the income in the form of donations. Legacies. Legacies are nothing but the property that is inherited by an organization by the will of the donor. We call it as legacies. Say some person has given his property to some society by writing a will. The property received by the society is through the will of the donor, and all those comes under the category of legacies. And grant in aid, that is received from the governments, income from investments, etc. So all these are the different sources from which an organization receives income. To continue with the characteristics, the fund raised by such organizations through various sources are created to capital fund or general fund. So whenever there is an income item that is received, those items are which are of capital nature will be created to the capital fund or general fund item for the organizations. The surplus generated in the form of excess of income over expenditure is not distributed amongst the members. It is simply added in the capital fund. Here, every year they maintain a income and expenditure account wherein they try to come out with a deficit or surplus. Surplus is a situation where the income is over and above the expenditure, or else in the other words, the excess of income over expenditure is called as surplus. Generally, in case of trading organization, the profit is shared among the members or the partners of the organization. But in the case of non-trading organization, the excess that is available or the surplus that is available will be added to the capital fund and will not be available for distribution among its members. The not-for-profit organization earned their reputation on the basis of their contributions to the welfare of the society rather than on the customers or owners' satisfaction. Here, in case of trading organizations, the company or the firm earns its credentials or the goodwill in the market by providing the services and goods to satisfy its customers. But in case of the non-trading organizations, the services that are rendered and the reputation that is gained by the organization will purely depends on the welfare of the society that is carried out by the organization. The accounting information provided by such organization is meant for the present and potential contributors and to meet the statutory requirements. Here, the accounting information is provided in such a way that it will give you the present and potential contributors. That means by looking at the information, they'll be willing to continue and contribute to the developmental activities of the organization, and in order to meet the statutory requirements, the accounts are being maintained. So these are all the different characteristics of a not-for-profit organization. In simple sense, an organization which has come into existence for providing the services or rendering the service to the society of a particular class or in general without having a profit motive objective is called as a non-trading or not-for-profit organization. Next, we'll move on to the financial accounts or the financial statements that are maintained by the non-trading organization. The not-for-profit organizations are also required to prepare financial statements at the end of each accounting period. Unlike the trading organization, trading concerns, the non-trading organizations are also subject to preparation of financial statements every year at the end of the accounting period. Although these organizations are not profit making entities and they are not required to make trading and profit and loss account, but it is necessary to know whether the income during the year was sufficient to meet the expenses or not. Here in case of trading organization, we generally prepare trading account, profit and loss account in order to arrive at profit or loss position of the organization. And here in case of non-trading organizations, we prepare income and expenditure account in order to know whether the incomes that are received during the year are sufficient to meet the expenditure of that particular year or not, or is there any surplus or deficit position of the organization. In order to do so, the income and expenditure account is maintained. Not only that, they have to provide the necessary financial information to members, donors, and contributors, and also to the registrar of societies, as the safeguarding of the donations or the incomes that are received from the members, donors, is utilized for the purpose for which they are given to the society or the organization. In order to check this, the accounts are maintained. Say for example, as we mentioned earlier, that there are different sources of income to these organizations, and here this organization has come into existence by having a specific objective, and based on that objective, the members or the subscribers will contribute to the organization, and these members or the donors are willing to know whether the funds donated by them are utilized for the purpose for which they are meant for. So in order to have that, the accounts are maintained by the organization. And not only this, it is also a required, it is statutory requirement that these non-trading organizations have to submit its financial statements to the registrar of society. So the preparation or maintenance of accounting records for non-trading organization will help the organization in safeguarding the interest of its members and seeing that there is no misutilization or misappropriation of the amounts that are available in the organization. For this purpose, they have to prepare their final accounts at the end of accounting period, and the general principles of accounting are fully applicable in their preparation. So whatever the general rules of accounting, that is the GAAP, the principles of accounting that are used by the trading concern, will also be applicable for non-trading organization while preparing the accounts, and they are subject to preparation of accounts every year. The final accounts of a not-for-profit organization consists of the following. Here, in case of trading concern, the final accounts generally implies trading account, profit and loss account, and a balance sheet. And here in case of non-trading organization, the final accounts includes receipts and payments account, income and expenditure account, and a balance sheet. Here, receipts and payments account is to maintain record of the cash transactions of the organization. Income and expenditure account is prepared in order to know whether there is a surplus or deficit position, that is the income side, track record of income side expenditure that is incurred during the financial year, and a balance sheet to project the financial position with its assets and liabilities. So these are the different accounts that are maintained in respect of not-for-profit organizations. So thank you.